Okay, welcome everybody to Creative Cap Table. I see folks coming in. We are going to have a wonderful kind of fireside chat today. Also, an opportunity for you if you want to jump on stage, formerly known as Clubhouse, if you remember that. We'll have a little bit of style for you guys to do that as well, but we're going to wait a little bit for folks to circle in and come in. And while we're doing that, before I introduce our guest for today, I'm going to tell you just a little bit about Creative Capital Access Collaborative. You're going to hear about InBIA as an organization as well. Everybody should be familiar, but if you're not familiar, we're going to make sure that you hear about that during our short little intermission before Q&A. But I really want to introduce to you today just the genesis of why we are here and why we're even talking about, VC or bust, why we're talking about alternative forms of capital, why we're talking about being creative and innovative when it comes to funding undercapitalized founders. And so we're excited. If you are here, please, Lindsay's helping us right out today. So please shout out your organization that you're with in the chat. Go ahead, shout out, even if you're on represent your city or your state. I have my guest today is from my alma mater, University of Michigan, although we're very green today. So if you feel so compelled to shout out your allegiances, then go for it as well. Raleigh, Durham, okay, and North Carolina, all right. State of Michigan, wonderful. Allison's from the state of Michigan. Excellent. So I'm going to also, in addition to explaining the Creative Capital Access Collaborative, I'll also get a little bit into our ground rules for today and what we're doing. So today we are going to be doing a live podcast. Now we're not streaming live, so don't get too scared, right? But we are having an opportunity for us to just have a live dialogue. We're going to share this video later. So if you would like to come in and join the conversation, just have your cameras on, so we won't take anybody up on the panelists during the Q&A session without your camera feed on, but some camera etiquette. Make sure you have great lighting, just so we can see your beautiful face or your handsome face, right? And then the other thing is make sure that you are just in an environment, an area where you have low noise so that we can hear your commentary, hear your question. If you're coming on, we definitely want you to have stable connectivity. But for those of you that are like, hey, I'm not trying to join the stage and come on, you can always go to the Q&A box. If you look at the bottom of your screen, you're going to see a square and it's going to say Q&A inside that square. So you're going to click that box. Now, when you click that box, you can add a question into that box, and we will choose from among the questions to answer it during the Q&A session. If you want to join us live on the stage during Q&A, then don't just add your question or your comment, but add your question and put hyphen join now, right? So I want you to put join now so that we know that you want to join. I certainly don't want to bring anybody up while they're, in the middle of the mouthful of their spaghetti or whatever they're eating, if you do not want to join. So hyphen join now. And likewise, I don't want to miss opportunities. We have so many thought leaders that are joining us. I took a look, we had over 70 people that registered for this. We don't know how many people show up, but there were some just phenomenal organizations. We had funders registered for this. We had many people representing entrepreneur support organizations that are joining us. We have entrepreneurs that are joining us today and wanting to learn about alternatives to venture capital for their own business. So we welcome all types of guests. We had some corporate guests today. So we want to make sure that we are just shouting that out. So keep shouting out your organization, keep shouting out where you're from. This is just as much about us learning and talking to our guests as it is about learning and talking to each other. The Creative Capital Access Collaborative is a community of practice that InBIA is put together specifically for those who are interested in getting outside the box when it comes to not just creative capital funds. And I'm not just talking financial. We're looking at financial, infrastructure, social capital, right? We're going to be talking about capital around human capital, right? So how do we get beyond just finance, even when we're thinking about capital funds? What does it look like to have a social capital fund? And I always use this example. It could be something as simple as, hey, an investor, right? LPs that are prepaid for social influencer time. That's a big thing right now when you're talking about certain direct to consumer markets. And then businesses are able, just like any other fund, to go ahead, pitch, submit themselves, submit the proposal, and get access to that prepaid influencer time so they can continue to spread and market their products and devices. That's just one example. You all have many more. So I want us to just be stimulating and thinking outside the box. But we're going to come together in this collaborative, not just through conferences and events. Charles will probably shout out, Charles, the director of InBIA, who we'll have during the break, will probably shout out our ICBI 40 conference. I'll ask Lindsay to drop the link to that in the chat. In Chicago, it's going to be an amazing, fun time. We have sessions that go way beyond capital, and we have a full day of capital conversation. So it's an excellent opportunity for you all to join us. Keep shouting out where you're from. I'm going to go ahead now, and I'm going to introduce our guest for today, Shane Kelley. I'm going to have to introduce himself a little bit too. And so, Shane, I'm going to pull you in. Now, y'all stick with me and bear with me because we're trying something new. So hopefully the technology doesn't let us down. We'll see about that. So I'm going to add Shane in. So Shane, I'm super excited to have you with us today. How are you feeling?
Great. I'm so glad to be here, Angelique. Thank you.
Wonderful. So I put these wonderful backgrounds behind us, y'all. And hopefully this will work out for us. We'll see. But I really want this is really just a convening of friends around capital today. So we're going to be a little bit less formal than you otherwise would expect. We just want to have authentic conversations about real deal things going on in the capital landscape. Today we're going to talk about VC from a real place. So Shane, before we even get into the conversation, I don't know if I ever saw you in Michigan. I think we had an overlap. And it's kind of one of those things. The more I see you, the more I'm like, I'm having deja vu that we probably crossed paths. But I know that you are not only an investor, not only a fund creator, but that you also work in the education system to revolutionize the way that our upcoming next generation of capital fundraisers are thinking. So do you want to just share a little bit about your background with the audience today?
Yeah, thank you so much, Angelique, for the quick intro. A little bit about me. Yeah, Michigan is where I did my grad school, and I'm a Midwest kid at heart. But I've also been spent a decade in New York City and Los Angeles, and now making my way back to Atlanta, where I did my undergrad at Morehouse for a very special role there, where there's actually we're standing up a fund at Spelman and Morehouse that will help train students on how to be their own kind of venture capitalists. How do they want to invest in businesses, right? This next generation. And what kind of businesses do they want to fund? What kind of organizations do they want to fund? So we have this whole fund called the Spark House Fund, Spelman Morehouse Clark, that we're now standing up there. And so I'm really excited about that. That's an initiative that sits in the Center for Black Entrepreneurship at Morehouse and Spelman. But what brought me to this place also is just running Cinematica Labs. So Cinematica Labs, a company that I started in 22, when we started partnering with Black Ambition, which is Pharrell Williams' organization, that he started to close the racial wealth gap, right? Really extraordinary work that I feel like we've been able to partner with them on over the last 4 years. We've provided really culturally relevant mentorship to 1,000 entrepreneurs. And so
Wow.
that has taught me so much, right? Working
Mm.
with entrepreneurs because I've been working with entrepreneurs and mentoring entrepreneurs, investing in entrepreneurs, and an entrepreneur myself, since 2012. And then before that, I was actually in the film finance space. So independent film, financing movies that did 250 million at the box office. So really where I've been is kind of this journey of supporting these entrepreneurs in the film industry that were trying to shake things up there,
Mm.
then shifting over, becoming a tech entrepreneur myself,
Mm.
moving into angel investing.
Mm.
Angelique mentioned University of Michigan. I started the angel group for University of Michigan, so we call it the
Okay, okay.
Wolverine Angels. Uh, and then ran an AI fund, AI backed fund out of San Francisco. And that all really kind of prepared me to sit at this intersection of media and film finance, tech finance, and then entrepreneurship in both of those domains, in all domains. And
Wow.
so I was teaching at USC, even teaching venture capital before. I'm now, standing up this fund at Morehouse and Spelman alongside, while I'm still obviously running my company, Cinematica Labs. So yeah, that's a little bit of kind of a high level, been a fund manager, been an entrepreneur 3 times, been a
So you
syndicate,
run
people
the
syndicate
whole
lead,
gamut.
like just done a lot of things.
You've run the whole gamut of everything. Well, I heard you mention a lot of VC roles, and you and I had a conversation. And you said, Angelique, I just want you to know that I don't think there's anything wrong with VC. I just think it's working the way it's supposed to work. And I read between the lines of that and understood exactly what you were saying. But in all of your kind of VC roles and experiences, and now what you're doing, when we talk about venture capital, can you want to unpack that a little bit?
Yeah, absolutely. So, I touched on the idea of kind of being a VC. So I was really spent a lot of my time in Los Angeles
Mm.
as an investor, running my angel group, which became an angel syndicate. Ran a fund out of San Francisco while I was still in the Los Angeles area. And so I've been on that side. I've also, did short stint at Dan Gilbert's fund, 10 years ago, 14 years ago now. What I learned through that process, Angelique, of making, over 30 investments myself through, organizations or funds that I was running, is that, we talk about this power law in venture capital. We talk about unicorn status in venture
Mm.
capital. Um, so one thing that I didn't mention is we actually partner with Annenberg Foundation on Pledge LA, where
Mm.
we're training up emerging VCs and placing them into internships that come from underrepresented backgrounds. What I've noticed in working with young people is it literally does not get through. It's like, wait, what? VC will just fund all the businesses that are good. And I'm like, no, no, that's not how that works.
Mm.
Really the way that it works is it's designed in a way that the investors are going, the strategy that has become ascendant in venture capital, right? If you're practicing venture capital, you're betting on those unicorns. You're betting on the few,
Mm.
and you're expecting most of your companies to just go out of business, right? The rooms that I'm in venture capital where VCs will say, well, this company, yeah, they're hiring new people. Yeah, they may be slightly profitable, but that's kind of a waste of time. They should just hang it up. If they're not doing something serious that's going to be exponential rocket ship, they should just give it up, right? It's not that meaningful. And, to the point where, for example, the example that I share with some students that really drives it home is one of my companies, one of my portfolio companies was doing 10 million in revenue and $1 million in cash flows. And it was a crisis because the VCs, the folks that were the biggest folks on the cap table, had already written it off. They were like, this is a waste of time.
Mm.
So I present to my students, like, who in here would be interested in running a $10 million business that's doing $1 million in cash flows and has an amazing audience and galvanizing a community together, you know, around this concept? They're like, that would be amazing. I would love to run a business that's throwing off $1 million a year. But it doesn't fit the venture capital model because they figure, well, the biggest it's going to get is $50 million in revenue. I need $1 billion valuation in order to make a difference on my fund. So venture capital is working the way it's designed, the way it's supposed to,
Mm.
but it just
Yeah,
doesn't happen to work for a lot of entrepreneurs. It may
for
not be a
every.
fit for a lot of entrepreneurs, and so that's what I've kind of, that's what I've noticed, right? It's
Wow.
not that venture capital is broken; it's
Mm.
operating as intended.
So is the narrative, when I came up, I came up in the deep tech space. So I had a startup, MemStim. We were doing neural implants. Now, most people are familiar with that area because of Elon Musk Neuralink, right? So we were doing nanotechnology and automated manufacturing and all that. So I came up as a
Sorry, hi, Shane. I'll step in with no question to ask you. I'll text Angelique, but yeah, can you share a little bit more, kind of building on what you were just talking about with how, what maybe some other capital sources, or it looks like maybe we've got Angelique back right now. So, Angelique, are you there? You're muted, so go ahead and unmute.
Yeah, I am here. Sorry, folks. Yeah, I definitely got kicked off back there.
So we
Some,
heard you up until your deep tech background, which I know we've talked
yeah.
about in the past.
When I was going through that background, I kept thinking to myself, like, okay, you know, what am I going to do in terms of my funding route? And I remember running into this very successful entrepreneur, and he had a huge exit in the med tech space. And within that space, he had done the VC route, but he had also done the bootstrapping. Another company that was successful did bootstrapping. And then he had done another way of raising capital. And he was the first person I ever met with that said to me, you don't have to do VC. And I'm going to show you what the trade off is for all the ways I did fundraising. And in my mind, it was shocking because I thought, well, you're successful. So, of course, VC. Why? I thought that was the clout at the time. And he was like, I will never go back to VC. And by the way, he was running a VC fund. And so I was even more surprised. I'm like, why aren't you running a VC fund? He's like, Angelique, yes, because for certain businesses, VC works. But even for other businesses where it works, right? He said, as a founder, you get to choose, do I want everything that comes with VC? And he said, for myself, although I run a VC fund, I found a VC fund, I'm a venture capital investing in businesses. When I have a business, he said, I don't do VC anymore, because of his personal motivations. So is there something that founders should think about in terms of their personal alignment? I know you guys talk a lot about the personal motivation with Cinematica Labs and seeking to the whole self of the founder. Let's say I am a good fit for VC. Should I do VC just because I'm a good fit? Are there other things I should consider with VC? And again, we're speaking not just to founders, but to those who are creating capital funds, because I think that there are some founders that are great for VC, but there are personal reasons why they don't want to take it. And likewise, there could be new venture capitalists that could hear those personal reasons that you guys see within the 1,000 founders you've interacted with, that they could begin to address those with their funds to not maybe break VC in terms of getting rid of it, but to break it in terms of making it better.
Right, right. I think, yeah, thank you so much for that story. That really resonates. Um, I think I'll share another example, Angelique, right? So there was a company that I invested in years ago, and they said, we're going to help small mom and pop neighborhood businesses to
Mm-hmm.
improve their business and lift themselves up. This is going to be great for their communities. It'll be
Mm-hmm.
great for these entrepreneurs. We're building this tech stack that's going to help them thrive. Raise venture capital. And, a couple years later, they're growing, they're doing great. But the calculus was, well, if you start serving these much bigger businesses, there's going to be so much more profits. So you should really stop serving these small businesses and focus on big enterprises so you can make a lot more money and grow in a much more lean way. Now, I share that example to share that, like, that entrepreneur, the reason they started the business was not to make a bunch of money.
Mm-hmm.
They came from an entrepreneurial family. They saw the challenges that their parents faced in building small business. So, like, how do we help small businesses? Well, if you raise venture capital, it's not about helping small businesses. It's about generating the most return for the minimum amount of money, right? The minimum amount of cost and scaling as fast as possible. So a lot of companies will tend to shift towards enterprise for that reason, big, large businesses. So what about those of us who really want to be anchored in our mission, our core problem that we set out to solve? And that's the answer to your question in my mind, Angelique, and in my heart is like, we need, as an entrepreneur myself, I I go out to build a business, not because, okay, this is the quickest way to make a buck, because it's hard and it takes a long time. I go out to solve a problem in the world. And if we
Mm.
stay rooted in our problem and we think about like, okay, what's the core thing you're trying to solve? Why is that important to you? This is what we ask of our founders. Why is that problem important to your life? What made
Mm.
that meaningful to you? Why is that meaningful to you? And if we stay anchored in that core, we call that our personal mission and business mission alignment. It's like
Yeah.
we solving the problem that we set out to solve. And if that is really important to us, we want to go solve that problem in the world, which is how most entrepreneurs are wired. 95% of the entrepreneurs we support, they care more about solving that problem than they do about making money and flipping
Yeah.
and exiting the company. So that is really the core of it, Angelique. And that's why I'm innovating on the capital stack right now. Is
Mm.
because for entrepreneurs like that, if you are not trying to prioritize hyper growth above profitable, cash flow, stable businesses that are growing in a linear way, there's no real capital stack for those businesses, right? Banks want to see 5 years of P&Ls.
Yeah.
You know what I mean? CDFIs are have very specific focus areas, which I think they're doing some good work of innovation there. But VCs are about like put in a certain amount of money, limit
Mhm.
costs, hyperscale, or just go out of business, shut it down. It's okay to shut it down, right? But I see a lot of businesses in my orbit that are thriving, that are doing cash flow and are mission aligned. They're like, you know, one entrepreneur that we supported, Health Evolve, just this past year. They are providing hardware and software tools for pregnant women who are at risk to
Mm.
self-monitor their own signals, and that sends it to the healthcare provider, to their
Mm.
team. So what they're doing is they're improving maternal health. They are
Mm.
literally saving lives for pregnant women and
Mm.
their children, right? Day in, day out. They're making a huge amount of money on that. You know what I mean? Now, if you really want to keep saving lives in the community, in high risk communities, there may be some venture funds that will be aligned, right?
Yeah.
But if you want to stay anchored in that mission, we need a
Mm.
new capital stack that will support Health Evolve, right?
Yeah, that is true. I was thinking right now about, we had an organization that I was on the co-founding side in a limited role. I'm not going to take full credit for that. MedTech Color, and we would have these amazing, like, I mean, founders that were coming up with these businesses, and we had one on maternal health. And they would give the pitch, and you see their financials, and you're like, this is great, but they were unfortunately in a niche where it would be like, hey, I might have and I'm not using anybody's real business. I'm just being very facetious. Oh, I have the cure for sickle cell. But because the population that it affects, is so limited, and FDA has a whole category called orphan, right? So they're like, hey, this is significant for health benefits, but the market size isn't large enough to commercialize it. So I often seeing those pitch decks of those founders, I would sit there as a judge, or I'd sit there as a host, and I would look at it and I would be like, how like life-saving cures are we missing out on because we don't have the capital stack to fill in that gap, because they're not going to be, the next unicorn, because the market sizes, but they could be, making 500 million a year. They could be making, 200, 300 million a year. But the cost also, though, and I think that's where catalytic capital comes into play. Sometimes the reason that those companies have a struggle with VC is, well, the cost to bring the technology to market is really high relative to the return on reward for what a VC would be looking for. And I think there's one thing I want to clarify, even for our audience, that when you talk about venture capital, it's not that they need a 10x return on every business because I'm just putting so much money into you that I must get a 10x return on you. It is because I'm going to invest in, let's say, 10 businesses. And you know what? 9 of these might fail. So whoever wins has to win so much more because they're compensating for everybody else that didn't get those super high returns they wanted. And so oftentimes people feel like, well, if you're not VC worthy, right? In quotation marks, then you must be a bad business, or maybe you're not generating a lot of revenue. And it's like, no, 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 no. It's like having someone be the oldest in the family. I'm the oldest person in the family, and my whole family, back in time, right? My whole family's livelihood is resting on my shoulders. That's what that winner within the VC fund has to be. And so it's not necessarily they have to be successful. They have to be successful enough for everybody else who didn't meet that definition and metric of success. So that means there are a lot of startups and a lot of small businesses and a lot of inventions, cures, things that we need in society that never reach the market, never reach the population, because they're going to be successful. They're going to be great. They're high potential. They're going to make a lot of money in revenue, but they're not going to make enough to sustain a 10, business portfolio. So they're not going to be a unicorn and justify the VC. So when I think about those entities, I think about the founders like yourselves of funds that are trying to fill in that gap. What are the types of, capital funds you've seen that help fill in that gap where I'm still high potential, I'm still making revenue, like some of the examples you stated, but I don't fit within the VC model for other reasons?
That's a great question. So, and one thing I want to highlight in what you said, Angelique, because your point was so on point, is that if this one company is making up for all the losses, all the companies that failed, right? Which is most of them in that example, the company I shared that was doing 10 million in revenue and $1 million in profits, cash flow profits every year, that's a failure. That's a failure, right? So that's what we're talking about. That was one of the companies that VC fund had told their investors, this company has already failed, right? So I just want to highlight that what we're talking about in terms of a VC failure is not necessarily what we think about as a founder, right? Or an employee as a failure, right? Or as a funder that wants to align my investments with my mission or my values, right? Now, that's where we're seeing a lot of this innovation take place. So, some of the examples that I've seen in that space, I mean, there's so many, right? One that's interesting is uh, we have organizations across the stack. We've got organizations, for example, who at the later end are gathering together capital and setting up a fund of funds that is going to promise to investors that every investment they make is going to be aligned with these core principles, right? We're going to mitigate harm to the environment, right? Or we're going to be about social justice in these defined ways. Uh, or we're just going to do less harm, right? In these ways. So you're building a fund of funds that's then going to invest in, folks who are managing funds that are doing new strategies. What do those funds look like? Those funds are looking like, for example, one in the Bay Area, ESO Ventures, that is funding small and medium-sized businesses in the Bay Area. And they're focused on folks who need some capital but have already proven out, right, that they can perform. So, so I think of, who I met at the Creative Capital event, Angelique, that you introduced me to, Mike Bells, as being someone who's kind of on that fund of funders side, right? He's trying to create accelerators for fund managers that are trying to do it in a creative way. And then I think of ESO Ventures out of the Bay Area that has funded, I think at this point, over 100 small businesses in Oakland, in the East Bay, and in all these areas. But they're really going in with a mission-driven element that's like, what are the neighborhoods that need to have these businesses there, right? For the community. And so they fund those businesses and they've treated it a little bit more like a debt fund as I think about it, right? But they have a lot of latitude where they could be doing debt and equity and combined things, but they're generating returns. They're not waiting for 5 years or 10 years like a VC has to wait just for a company to sell. They're actually
Mm.
participating in the cash flows from these companies that are already profitable, right? And so in that case, a $10 million a year company that's doing a million in cash flows could share some of those profits with the investor and make that investor whole in real time, right? This, I think, investing in this kind of way, Angelique, could unlock so much because I have so many. I ran an angel group, as you know, and I know so many angels who say, you know what, my capital has been locked up for 10 years in this portfolio of 50 companies. And then once in a while, I get, some of it out. But like, what if those angels, we could give them an opportunity where, hey, you're going to start seeing cash flows in 12 months or 18 months, right? Those
Mm.
are the kind of deals that we're looking at. And so we're looking at, things that we can form at Cinematica. We've seen so much opportunity, especially in areas that intersect with real estate, right? And areas that intersect with media.
You mentioned real estate, and we're gonna bring up Charles in a moment. We're gonna have a little bit of an intermission as we shift into our Q&A session. So I'm priming the audience here that go ahead and throw your questions in. If you want to join us on the panel itself, again, just put join now there. Charles, I'm not going to bring you in just yet, but I'll bring you in shortly. And Charles is ready. But you mentioned real estate. So we talked about donor advised funds as a potential capital source when you're thinking about funds that can support for-profit business. Now, most people are familiar with donor advised funds from community foundations. And community foundations, at least the ones I always interacted with, said, well, if it's not a nonprofit, we can't do anything with it because we're using donor advised funds. But lo and behold, other like impact foundations, a very good example of this. Other organizations are like, hey, no, you actually can use DApps for-profit entities. And in fact, Impact Foundation even funds with DApps funds. And so I've sat in some of their deal flow where they're funding, funds of funds in South Africa. And so they're funding things all over the world. And again, not from a nonprofit perspective, but from a for-profit perspective. And the advantage to those, let's say, because their DApps are basically a type of angel investor in a way, right? It's not technically an angel investor, totally different legal rules and paperwork and everything else. But when you think about an individual, who has a high net worth, DApps don't even have a requirement, but typically tends to be philanthropic individuals or families that say, hey, I want to put my money in a vehicle, an investment vehicle that's also a charitable vehicle. And the only requirement is that whatever they make in returns has to go back to charitable works. So if I'm being philanthropic, my ability to have patience with the journey for a company that has high human impact is greatly increased, because the alternatives would be maybe I might invest in a nonprofit. Maybe there will be no returns in that except for the human impact. So the human impact is what they care about the most. And so there was a deal that I just heard about, $36 million around a real estate deal that was really tied into community. How do we revitalize a community? How do we deal with these large land masses, people have like these plots of land, but they don't have, they call it land poor, right? I don't have the money to build the development to really help the community out. And they did this wonderful structure, this wonderful deal. But it was a large $36 million deal. And that's nothing to, sneeze at. So what we're talking about creative capital, we're not just talking about, although we value that as well, trust me, 10,000, 5,000, 50,000, 100,000, 500,000, a million here, a million there. There are very large deals that people are funding creatively. And by the way, have been doing so for many, many, many decades. What we want to do is shine a light on that and bring it to the forefront. And so I'm excited that you mentioned all those examples of how people are doing things creatively. Right now, for those that are attending with us, we're going to put up a short little poll, and we're going to ask that you put your Q&A into the box. If you want to join us on the panel, then join us on the panel. As I'm doing this, Charles is actually going to come up. He's the director of InBIA, and I'm going to let him come up and tell a little bit about InBIA, and then we're going to come right back. It's going to be a 60-second break. We're going to come right back to the Q&A section. So Charles, I'll let you take it away.
Great. Well, thanks so much, Angelique and Shane, for this very important conversation. I just want to take a quick 60 seconds to invite those of you who are new to InBIA to consider membership in InBIA, and want to talk to you about membership is really core to our overall mission as an organization, which is to empower entrepreneurial support organizations, organizations that are taking a programmatic approach to supporting entrepreneurs. And it's really through membership. Membership is kind of that glue that where we bring together not only thought leaders in the space, but also do leaders. And we bring together those individuals by providing trusted connections, providing professional recognition, and also by providing collective advocacy, and all with the objective of strengthening your programs, expanding your individual and professional influence, and to advance the field. So just a little quick about this community of InBIA. It's about 1,000 practitioners. We have members in just about every U.S. state and 20 countries outside of the U.S. One of the things I love about the community is the diversity in terms of the different types of companies that we support, everywhere from deep tech ventures to community organizations, community enterprises, social enterprises. Diversity in service delivery models, but one of the common factors across the community is a commitment to sharing, commitment to learning from others, and a commitment to advancing the field. So if that sounds like your organization and you individually, call to action I think Lindsay's going to share, is a URL to our membership benefit page on our website. Just invite you to check out membership, the benefits of membership. And if it sounds like something for you and your organization, feel free to reach out to us, and we'd love to learn more about your work and to see if membership's a fit. Thanks so much.
I'll mute myself. I heavily encourage you all to definitely consider InBIA membership. It's just a one-of-a-kind organization, 40 years old. And Charles didn't mention, I believe I just saw an email that we have, just huge partnerships, with Time Magazine to feature different ESOs, and the opportunity, again, to come together with other practitioners and really build together in a collaborative way is just phenomenal. So I am going to pull up some of the Q&A questions that we have for you, Shane, and for myself as well, maybe, but mostly for you. I'm going to kick it to you. All right. So Anita Bell, and she says, great discussion, and something we're in the midst of trying to figure out also. She's with UACI, a traditional incubator in Arizona. Her question is, how do you see venture studios fitting or not fitting into this ecosystem? She also heard of a recent approach where basically a VC fund where investors can withdraw capital intermittently. It seems to her that VC/high net worth individuals are trying to figure out the capital stack. But how long do you think this will take, or will it just be ever evolving as there are so many influences on it? So that's a few questions there. The first question she's asking is, how does venture studios fit in with this model? And then we'll unpack the other ones. And again, if you want to join the panel live, don't be shy. I see some familiar faces in the chat. If you want to join live, certainly drive line. If you want to add a comment, please add a comment. We have some wonderful thought leaders in the room. So Shane, how does the venture studio model fit into all of this? And what is even the venture studio model?
Right. So, as an educator, I've been teaching at USC and now leaning in at Morehouse and Spelman. So I gotta get into the definitions real quick. So first of all, I'm going to rewind for a moment, and I'm going to come back to that question, Angelique. Donor advised funds you mentioned, and it took me, for some reason, it took me a long time to really get a handle on what those are. So I just wanted to touch base on that. You defined it a little bit, but one way of thinking about donor advised funds is like, if you're thinking about being an angel investor and investing in individual businesses, if you do it through a donor advised fund, instead of investing in a business and then waiting to see and holding that as an asset, if you do a donor advised fund, you get the write-off immediately. So you get a tax benefit by putting your capital into the donor advised fund on day one. You get that benefit, right? You get that write-off. And then it sits in the donor advised fund, and you can literally use that money to invest in for-profits, into nonprofits, you can do grants, you can do whatever you want, but you can then grow your assets in that vehicle as long as it's all aligned with your own mission
Mm,
that you set out for that, right? And so you can ultimately draw it down and grant it out. But it's if you have the desire to have an impact in the world with the capital that you have, a donor advised fund for as little at like, and it can be very small amounts, right? It can be, I think, $10,000, $15,000
mm,
to start a donor advised fund. So I just wanted to define that a little bit because that is an area that we're seeing some innovation
mm.
emerge in the capital stack. Coming back to the venture studio model, what's a venture studio? I mean, it's anything you want to call it. Honestly, like people just call a venture studio if they feel like calling it a venture studio, I think. The core models typically are okay, I'm going to go raise capital, raise a fund, and I'm going to like build businesses inside of this group. I've got a group of entrepreneurs. We have a deep bench. We all know how to do this. And we're as a group just going to spin up business after business after business, right? And so that's what I think of as a donor advised fund. Um, I mean, sorry, not donor advice as a venture studio. That's one method of a venture studio. Another one is like, we're going to put this fund together and then we're going to go find entrepreneurs that we believe in, but we think they need support. And we're going to invest in them and we're going to wrap around them as a team. We're going to provide some technology, some development, and other things to support them. Is that a model that I'm seeing some innovation? 100%. But I'm going to generalize this question a little bit, Anita, because the moment that we're in right now, I'm seeing venture studios, I'm seeing DAVs, I'm seeing fund of funds, I'm seeing uh, seed funds, I'm seeing SMB funds, CDFIs. I have been talking about innovating on the capital stack for 10 years. In the last year or two, it feels like almost every room I'm in, people are talking about it, right? This is like, it's like when you discover a nascent technology. You know what I mean? Like everybody is on AI right now. But a few years ago, 5 years ago, not everybody was on AI, right? I
Mm.
was working on an AI driven fund from 2017 to 2019. Nobody was checking for AI outside of our little circle of AI operators and investors, right? And so when you feel that like density of people all trying to do it differently, including venture studios, including other folks, foundations are doing it. That's when I start to feel like, oh, this is interesting. People using land trusts in new ways to build community-owned real estate operations for developments in the neighborhood. Just discovered two more, one in Chicago, based out of Chicago, and one based out of Philly, that have already done $22 million in one case of community funded land trust so that like the businesses thrive and the community profits from it. It's like those are the things that we get really excited that I get really excited about. So that's why Cinematica ourselves, like we're actually standing up a capital stack that'll fund entrepreneurs in a different way. And so that's a lot of the conversation that Angelique and I have had over the last many months of going deep on this. So like so many rooms, so much momentum around this concept right now.
Yeah, and I agree with you. Venture studios can be anything from I am a coach and now I have a venture studio because I'm providing you some advice, to I'm going to give you some actual fundraising ideas. One thing I wanted to add a commentary, venture studios is, and this is I heard this is a hot button thing. I probably shouldn't say it, but what I like about the traditional thought of a venture studio, which is that a venture studio would be a studio where you would actually provide not just the money to the businesses, but you would literally like raise them up. So you provide all the services to the business and you would be really come in almost like another co-founder, right? Not even almost like another co-founder, right? And you would raise up that business, but because you were so intimately connected, maybe, with you're putting more than just investment dollars, you're putting sweat equity, you're putting all this in as a studio, you're more inclined to go the extra effort. And I always say that in many cases, I believe that ESOs, entrepreneur support organizations, many of our favorite, business development centers and the centers across the nation and even internationally, I think that the venture studio model, what I love about that, even for ESOs, and many of them are already operating, you don't even know it, that you are a venture studio, is the concept that you're all in on this business. And when we think of traditional VC, we think, well, you get someone's going to sit on your board, but it almost feels like, for certain people that have been in that case, like, oh, well, that could feel like you're just there to watch me, or you're supposed to be there to help me. Whereas the venture studio is like, I'm not just here to sit on your board or anything like that. I'm here to actually walk with you, because technically I more or less own you, right? So you give up more equity in some of those models. But I just want to highlight that many of you may, already be operating in a way as a venture studio, since the venture definition is so broad. I wanted to get one more question from the chat. Anita, we won't probably get to all of your questions, but there was another question that I thought would be an excellent opportunity for Shane to give us some definitions around, which is, we had a question from Chuck Wolf, and Chuck Wolf says, how do you see Zebras Unite fitting into the continuum? And so I guess, Shane, what is a zebra? And I mean, we've seen all things in the VC world, including a famous venture capitalist that put out a video burning a unicorn, a toy unicorn, and having a zebra, I think, march through the bit or something crazy like that. But what is a zebra, and how does that play into it?
Thank you for this question, Angelique, and thanks, Chuck, for bringing this forward. Um, so the burning the unicorn, that was hilarious. So I think Bryce, so NDVC, if you want to find the burning unicorn, it still may be on the website, indie.vc. They were trying to innovate on the venture model where they could benefit either from getting paid out of profits from the company or through an exit. And they were like, we don't need unicorns. So they had a burning unicorn up on the website, which was very provocative and hilarious to me. Um, so that's the NDVC piece. Zebras Unite, love the organization. I actually spoke at their DazzleCon the year before last. Time is, I don't know what time is anymore, but like, I think it was 23 or 24. But spoke at DazzleCon, and it's an amazing, it's an amazing organization that has done some really good work, to popularize this idea of a zebra, right? Instead of like, we need a unicorn, which is $1 billion valuation. What if we have a company that just like doing their business and thriving for the long term? They're integrated into their ecosystem, right? It's not this rare thing that is magical. It's just an animal that's part of the natural ecosystem. And the equivalent of that in our world, in the entrepreneurial world, I think is, and you brought up angels and that they need an exit as well, is just this idea that I think NDVC was popularizing, the idea that like, what if we don't have to wait for an exit?
Mm.
An exit, by the way, is when the company sells. And typically in a venture model, you don't see any money back as an investor until that company either sells itself to the highest bidder or goes public on the stock exchange. Other than that, it's a zero, right? Even if it's a thriving business, it's a zero for the investor. What if we can generate returns from those businesses before an exit? That's what I'm seeing a lot of interest from angels around, because a lot of them, as I mentioned before, are waiting around for an exit that is just so fleeting and few and far between unless you have a big enough portfolio. So that would be like how I would tie those two together. The thing that I will also say is like, I just want to shout out, like, it was amazing to be in a room with Zebras Unite and kind of be in a room of people who are thinking creatively about the capital stack a few years ago and thinking creatively about building entrepreneurial businesses with that mindset. And I think I feel the same about MBIA. It's, we almost, we're like, oh, are we at ESO? Yeah, we're in ESO. Cinematica's in ESO, but we're also standing up our own capital stack, right? And that doesn't mean we're not at ESO. We are. And being in a room with MBIA that the organization convenes for us to connect with other ESOs, and specifically, I think the work that you've done, Angelique, to bring those of us together who are catalyzing new forms of capital and talking to funders and fund managers and entrepreneurs has been like a revelation for me, right? It has been so powerful to be in that room. So I do encourage like ESOs that are out there in this room, funders who are trying to think creatively about what entrepreneurship should look like in the future. and what it can look like literally today. Being in these rooms at NBIA convenes and organizations like Zebras Unite convene, it has been really impactful for me.
Wow, thank you so much. It's always good to hear good feedback. And we really just, feel like it's super important, to be able to have this community of funders, ESOs, just working together. I'm going to kick a question to you. Let's see. Well, give me one moment, pulling up this. Okay, so I have a question here, and it's asking, about the Angel Capital Association. And so it's saying, as an extension of my first question, so this is Chuck again, a lot of ESOs look to angel investors as potential seed investors, but just as VCs, they need the opportunity for an exit. Okay, so I feel like you've already kind of answered this. Have you seen any broader efforts through other organizations such as the Angel Capital Association to establish the process, legal docs, et cetera, to provide alternative exits for the smaller successes you've mentioned? I'll start with this answer, Chuck. This is exactly why we have stood up the Creative Capital Access Collaborative. We don't just want to have dialogue. We don't just want to like support each other behind closed doors. We actually want to put out toolkits. We want to put out like the legal, the accounting. We want to put out the playbooks for how anybody can build a fund like they're building at Cinematica Labs, right? And, and oftentimes it's not because people don't want to spread this knowledge, right? So, how do you become an angel investor? It's not that people are trying to hoard it. Some people are, right? But it's just that you're so deep into your own work, right? And you're trying to get it done. And we're hoping through the collaborative that we can come along and say, hey, you keep doing the work, but can we kind of be in the room, right? And we'll have certain collaborative members. If you're that type of collaborative member, say, hey, I want to be in the room to help them turn the work into a framework that then could be shared, and not just a playbook of here's how you could do it in theory, but here's the documents. And I always use a safe note as an example of that. Safe notes were happening behind closed doors, not because people were trying to be secretive. They were just doing life. And then Y Combinator, as an ESO, said, hey, let's just make this public for everybody. And that made a big difference in terms of access to it. But they gave the actual tool. So I'm going to let you, Shane, answer that. I'm actually going to pull up Heidi Knobloch, and she's going to come and join us on the panel as well.
So excited to meet Heidi. I've heard such good things. So yeah, I'll touch on this as well. I mean, one thing to think about too is venture capital is a new asset class, right? It's only been around for what, a little over 50 years. So what were they doing back then? They didn't call it venture capital, right? It was like just people experimenting and getting to critical mass. And I feel like that's where we are right now. And to the extent that we can, as Angelique mentioned, open source the codes and the documents, there's so many experiments that have been going on, especially in the last 5 years, that the more that we can open those up and get folks comfortable with these new models, we need that momentum because it's going to lift everybody up. And that's part of the reason that while I'm working on like a private fund at Cinematica, I'm also working to stand up this Sparkhouse fund at Morehouse and Spelman, because I think academics can play a core role in this, where we can be a little bit of a Switzerland, where it's like, okay, we're going to be that place that can collect a lot of the codes, share them out, and vet them in an academic setting so that we can say, no, this is a really great pool of resources that we can all share and contribute to.
I love it. Well, I have brought Heidi up, and Heidi, I apologize if I have butchered your last name. I will let you not only, and this is where we're now at the tail end, and I'm super excited that Heidi, again, she just joined us from the audience and came up here. So I'm super excited that she's here with us. And so I'll let you introduce yourself. You're doing a phenomenal platform to help, ESOs manage their funds, but you're doing the heavy lifting for them. And so maybe introduce yourself briefly, introduce your platform briefly, and anything else you want to share before we close out this session.
Yeah, I'll be super fast. I have to agree with Shane so much. Like, it's so nice to be in a room like this where like I don't have to explain myself. Like, you guys know exactly what I'm saying. And so Shane, I've heard such good things about you. And my team and I were talking about you this morning because Angelique said that we're going to be on a panel. So just kind of a shout out to Chicago. If you want to see more Shane, you want to see more me, we'll be in Chicago for sure. So my name's Heidi. I've kind of spent my last couple years in like the intersection between economic development and venture, and most recently was working for New York State's New York Ventures, managing their fund of funds that was created by the state-sponsored credit initiative, which I'm sure a lot of you know about. So it was a $150 million fund of funds that we were allocating. And we carved out about $50 million of that to allocate to ESOs to help them start funds. And when I was there, and I wrote the RFA for that specific pot of money. And when I was there, I would have ESOs come to me and say, like, oh, I want to start a fund. I've got $3 million. And I'd say, that's definitely not enough money to start a fund with, like, that has SSBCI money in it, right? Like we're talking $30 million. And so I saw this kind of gap in the marketplace where a lot of the ESOs that I cared about didn't have the infrastructure to have funds. So I created something called Home Field, and we're a fund infrastructure for people. So we basically have the whole infrastructure. And then we created something called New Funders Studio, which is an agentic AI solution that allows you to kind of talk through these different alternative investments. Because like you might not want a fund that only does convertible securities if like you want to do something that's more like a shared earnings agreement. I would love all of you to be betas on that, like building that in public for sure. We are launching it on March 1st when we go to the IEDC, so I can throw a little type form in the chat for you guys to sign up for that if you're interested in hearing more. But Shane, I just have to tell you, it was like, so when Angelique said we both submitted proposals, that it's like we were both writing from like different hands. Yeah. So it's like it was really, really, really good to see that. And it was so awesome to hear you today. I feel like I think if I were to add something to just everything we've been saying is just exactly what Shane said. It's like, how do we do more of this in public? Venture capital is meant to be exclusive. Like that's the whole thing, right? Is that, venture capital is kind of this behind closed doors exclusive thing. Like it does not need to be that. And like capital in a lot of our communities, we don't have venture backable companies in a lot of our communities, and that's fine. We've got lots of growth companies that can still produce a return for investors. And so I think if we all work together to, figure out the best way to get the resources to entrepreneurs that they need. And Angelique, just your comments from the beginning were just great on like, how do you do kind of social capital funds? Right? Kind of how do you pair all of these different things together? So really, really great stuff from this panel. I'll throw that type, and I'm sorry, it's like a little crass throwing this type form in the chat, but if you are interested in that, I'll put that in my email in there.
Count me in. That sounds like
Yeah.
that resonates with me, Heidi, in terms of what you're building. I love that.
Yeah. Well, you all, we have come to the end of our session, the end of our time here. And, thank you all for bearing with all the tech difficulties. I always tell people I may have a PhD in electrical engineering, but God help me. I can make the computer chip to run the computer, but pushing these spotlight buttons and staying on the Zoom, Lord have mercy. I'm not, go blue. So we're going to end here. And I just want to, again, thank everybody for attending today. I believe I saw in the chat that we had Pat, who is the CEO of Angel Capital Association, which was here with us in the chat and joined with us. So, ACA is going to also be at the Chicago conference. I promise y'all, this is not a pitch for a Chicago conference, but I just believe that in InBIA, we stand by it. We put together things that are practical that you need. And so I can't help but talk about it. And so ACA, Angel Capital Association, is going to be there. So it's great to see Pat here. He said he really enjoyed hearing from all the speakers that we've had today. Come out and join the Chicago conference. You can. The registration links, I think, have been sent out. We'll probably follow up with something after this. But again, thank you to Shane. Thank you to Heidi for being bold, coming up here, sharing your stuff. We're going to do this again, guys. This is, we call it semi-monthly. We're going to skip a few months in the year. And that's only because those are the months that we're going to be in person at the conferences. So our next one will be in March, guys. We're going to hit topics. Again, we're going to dig deeper into donor advised funds as a way to raise LPs and quotation marks for your funds. We're hoping, I'm already, Heidi said something, got my little ears perked. And so we definitely want to have a seminar, webinar, and live podcast specifically on how you as an ESO can create your own fund and how it doesn't have to be a nightmare situation. right? It doesn't have to be something that's just too intimidating, and how you can benefit from those funds as well as helping the entrepreneurs. We're going to talk about creative ways of lending, how you can have guaranteed loans where you go out and you raise philanthropic capital to guarantee loans so that more loans can be deployed, even through the CDFIs. Because as Shane mentioned, CDFIs are a great mechanism, but even they have some hurdles and challenges in terms of deploying the capital. So we're going to talk about a lovely constructs, hopefully some revenue-based financing constructs as well. So stay tuned. And as always, guys, stay creative on your capital side. And we hope to see you, if not in Chicago, at our next live podcast. And join us too next time. Don't be shy. Come on. All right. Talk